So we got breaking news from China. Holy crap. This is going to trigger a short squeeze potentially. And we can expect tomorrow, Monday, the stock market here in China to be green and just rocket up. Okay, because this is pretty big news. This is, of course, Shanghai and Shenzhen. They have the stock exchanges decided to suspend strategic investors from lending shares within the promised holding period. So this is quite big. And before I explain more about this, let me tell you the problem, all right? The problem here in China. The problem is a lot of times, if a company IPOs in the US, they would usually give Morgan Stanley or these issuing firms some shares, and they would be restricted shares. Well, it's the same thing here in China. But what they would do is that, for example, the CEO of the company, of some companies here in China, all right, some sketchy ones, all right, they would borrow these shares that are restricted, that the firms have, the issuing firms have, and then essentially sell it, all right, borrow it and sell it, and then sell their own shares as well. Sell it, basically selling more shares than what they have because some of those shares are borrowed. And then once the stock price crashes, then they buy back those shares and then give it back to the issuing firm. And it happens a lot. It's essentially short selling, but you're short selling with like restricted shares. And this actually happens a lot with bigger institutions. Individuals, you're not able to do any of this, and short selling is illegal. And even though the firm isn't allowed to sell the shares, which is really crazy to think about, right? They have those restricted shares. They can't sell it, but they can lend it to other people to sell it, and they can earn a little bit of money from lending those restricted shares. So China has completely put a halt to that, basically not letting that happen anymore. And that means that we could be seeing a short squeeze in the next couple of days. Many people here in China are saying we're going to gap up tomorrow in the Chinese equities. Possible, very possible. And this, by the way, has always been a loophole to short stocks, which, you know, should never have occurred, all right? This is essentially them closing down the loophole, and now it should be pretty much impossible to short stocks here in China. No more loophole. And that, of course, is going to help out Chinese equities. And tomorrow, it takes effect tomorrow on Monday. So essentially, anybody that has a short position in Chinese equities here in China, and those shares are definitely borrowed from these restricted shares from other firms or other investors, then it's illegal. They gotta give it back, basically. This is quite good. This is quite good. So this is what Reuters had to say about this. China's securities regulator said on Sunday that it will fully suspend the lending of restricted shares effective from Monday, in policymakers' latest attempt to stabilize the country's stock markets following recent sharp falls. A string of supportive policies by Beijing, including a deep cut to bank reserves, helped lift Chinese stocks off five-year lows early last week, but they retreated again on Friday, reflecting deep investor pessimism over the outlook for markets and the shaky economy. Analysts and investors say Beijing needs to roll out more support measures to revive consumers and business confidence and get activity back on a more solid footing. Restricted shares are often offered to business employees or investors with certain limits on their sale, but they can be lent to others for trading purposes, such as short selling, which can add pressure on markets during a prolonged slump. Sunday's move will highlight fairness and reasonableness, reduce the efficiency of securities lending, and restrict the advantages of institutions in the use of information and tools, giving all types of investors more time to digest market information and creating a fair market order. The Chinese Securities Regulatory Commission, CSRC, said in a statement published on its official WeChat account. The CSRC added that the move would resolutely crack down on illegal activities that use securities lending to reduce holdings and cash out. The regulator also said it will limit the efficiency of some securities lending in the securities refinancing market from March 18th. Last October, the CSRC restricted securities lending businesses and tightened scrutiny of improper regulatory arbitrage by imposing higher margin requirements. China's stock market tumbled in 2023 and has extended its slide in the new year. Though the blue chip CSI 300 index has recovered some ground, it's still down about 3% year to date. Small Chinese investors are scrambling even harder than foreigners to exit the crumbling stock markets, sending premiums on global index funds skyrocketing as they search for exposure to anything but the sputtering domestic economy. China's economy grew 5.2% for 2023, slightly above the government's target, but the comparison was flattered by a weak lockdown hit 2022, and the recovery has been highly uneven. December data shows lackluster consumption and the fastest fall in home prices for 9 years, with the property market in deep crisis. Both Shanghai and Shenzhen stock exchanges said they will suspend securities lending by strategic investors during lockup periods, effective from January 29th. So if we take a look at the Chinese equities, the past couple days really bounced up high, 2,900 right now, and I think with this short squeeze event, which it's essentially the government squeezing the shorts, we could definitely push up to about 3,000 on the Shanghai Composite. That's pretty nice action in my opinion, and where we go from there we'll have to see, but it does seem like we might get up to 3,000, maybe even like 3,100-ish. All right, this is obviously very strict measures that they're doing, very strong measures that they're doing. Now in terms of NIO stock, let's take a look at NIO. If NIO also bounces and just rallies like the rest of Chinese equities and follow suit, we probably go up easily to 6.75. And this will be pretty interesting because we have this channel going on over here. Boom, 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 boom. Okay? And if we really want to go higher, I think we have to break the 6.75 mark around this area. We got to break above 7. Otherwise, this just is just the channel being validated further. So we want this to break. We want this to break as well, and we want to be peeping our head back above 7 and staying above that. Otherwise, this level, this might be like a tough area to break through. But I think, we're gonna see something like that go on and probably head up higher and get to there at least. Okay, at least the minimum. And guys, don't forget to check out the penny stock SXTP. Pretty interesting investment opportunity in my opinion. Might 2x, 3x. So keep an eye out on that. Not financial advice. All right.